Select to go.
Good evening, and welcome to the first seminar in the Nonprofit Essentials series. For the next 3 Wednesdays, we will be discussing operations and management topics for nonprofit staff and board. We hope you can join us for the following 2 Wednesdays online, and then our concluding Wednesday will be May the 13th in Houston with a live event, and it will be a panel discussion on board development and strategy. So we hope if you're in the Houston area that you can join us to wrap up this 4-part series for nonprofit staff and board. This series is presented by the National Endowment of the Arts and the Texas Commission on the Arts, and in partnership with Houston-based service org Fresh Arts. So we're about to get started. Just a reminder, if you would like to ask a question in the chat, you need to log on to a YouTube account. You can watch it from any computer, but if you would like to ask a question, you need to have a YouTube account. Those are free if you don't have one, so you just would need to register. Then you can ask your questions in the chat. The chat is moderated tonight by CPA Lisa Sertinovic, and our presenter is Kathy Ploch, and I'm going to turn it over to her to walk us through the exciting 990 tax return.
Oh goodness! Well, thank you so much, Lisa, for having. We haven't had this in 3 years, I think. So I'm excited to do it. The good news is there's probably not a whole lot that has changed over this time, but it's always a good refresher or whatever. So I'm Kathy Ploch. I'm a CPA. I was a TALA. Here in Houston, I was the TALA president for a long time ago and still enjoy volunteering. And I'm so happy that you guys are on with us. And I'm so happy to Lisa to help me out once again to do some of the questions that you may have. And please do ask questions throughout. This is for you, and it's important that you try and get at least some of this information. I think, this will be available. And so, if you don't get your questions answered or we don't have time, we're kind of, don't have we've got about an hour and a half. So you've got my email address. That's the best way to get in touch with me. And I want, again, thank you also my great people at Fresh Arts for being part of this. So anyway, tonight what we're going to do is we're going to sort of walk through the 990 EZ many of you are going to, it's coming up due, by the way, here pretty quick. So I think this is a timely thing that we are going to do. So let me go. Here's our agenda. So we're going to try and go through this. The first thing you need to know is which forms am I going to file? There are 3 of them. So sometimes it depends on your income level as far as what you need to file. Getting started, we're going to talk about the 990 EZ. Then there's schedules that are usually, these are the common ones, Schedule A, B, and G. We'll go through those of what those are. Then we'll have the Form 990T, which probably most of you won't have, in the sense that that is for unrelated business income. And we'll talk about that just pretty briefly. And then I want to kind of just quickly go and see the difference between the 990 EZ and the 990, what I call the full-blown 990. And so we will go ahead and get started doing that. I don't know if there's any questions yet, probably not. But so first thing is like I said, there are 3 types of returns that you should file. One of them is, the very first one is what we call the 990N postcard. It is not a postcard. I remember when the IRS came out with this, I remember having somebody say, well, where's the little postcard? Well, it isn't a postcard. I don't know why in the world they called it that. But that is something that you file online on the irs.gov. It is for organizations that are very small. As you can see, it's gross receipts of $50,000 or less. And you are, you don't need to have an account or anything. You can just go online. It's very easy. There's not much to it. You don't even have to do any kind of bookkeeping, or at least at this point, they don't ask for any dollar amounts, other than you need to attest that you have less than $50,000 of gross receipts. By the way, that's over a 3-year period. It's an average of over 3 years. So maybe some of you may be brand new and just started. Maybe 2025 was your first year, and maybe you only have, $20,000 or something. That's not a problem. You would go in and file this. If you have, one of the things that nonprofits do that are kind of unusual is a lot of times nonprofits have different year ends. When you have a December year end, we call a calendar year end. That's January 1 of 25, for example, to December 31st of 25. But a lot of nonprofits also have what we call fiscal year ends. That, TALA was, back in the day when they set up, TALA was really good about doing a June 30th year end. If you were a school, sometimes they would do, May 31st or July or August 31st. So a nonprofit typically, a lot of nonprofits do have different year ends. And so, so if you have a December year end, which is our calendar year, then your tax return is going to be due on May 15th, which is coming up quite quickly. You can get an extension, but that extension will extend that time for 6 months. So using, once again, the example of 12/31 of 25 is the year end, it's due May 15th, you can get an extension, and that will give you till November 15th to actually file that return. So when you're doing a 990N, there's really no reason to do any kind of, there's not an extension for a 990N anyway, as long as you file it before the November 15th deadline. So the next report that's due is the 990EZ. Now, that's probably what we're going to talk about. Most people probably in that, especially if you've been at least established a little bit. That's where you have gross receipts that are less than $200,000, and total assets must be less than $500,000. So I have a couple of clients that do have less than 200,000 of gross receipts, but they have some assets that are actually more than the 500,000. So I have to file a 990 even though their gross receipts are less. And I do want to emphasize, when I say gross receipts, I'm not talking about what your net is after expenses. I'm talking about what your total gross receipts or what you have received in income.
And Kathy, when we talk about gross receipts, that doesn't mean just donations, right? That includes grants. That includes, right, yes, all of your donations. What about in-kind donations?
The in-kind donations don't count because we don't usually put those on the return. but you need to keep track of those. And we've got a slide about in-kind, donations as far as that's concerned. So yes, it can be a little bit tricky, especially where I have sometimes the problem, for example, is an organization, maybe we start out with a 990 EZ, they have 150,000 of gross receipts. Then the next year they get, some great funding, right? So now they've got, 250,000. So now we've got to go over to the 990 and fill that out. So, okay, so maybe they do that for 2 years, and then all of a sudden the third year they go back down to 100,000. Well, the question is, do you go back down to the 990 EZ, or do you just stay with the 990? So I tend to stay with the 990 just because of the software. It's already there, so, but if you're the one not using software, if you're the one typing it out on the fillable forms that the IRS has, you probably would want to go back to the 990 EZ. And so the 990, once again, here we talk about is equal to over 200,000 or more. And then, certainly your total assets that are greater than 500,000. As I said before, you have, they're due on the 15th. The technical term is it's due on the 15th day of the 5th month after your year end. So once again, if we have December, it's due May 15th. If you have a June year end, for example, it's going to be due November 15th. And then you can get an extension for 6 months that would make it due May 15th of the following year. So literally, if you extend the return, you have 11 months to file that return. I wouldn't advise it. I don't see any reason why you should have to wait that long. The main thing that I want everybody to know is that you are required to file something every year. And even if, for example, if you had maybe, God forbid, maybe you had no gross receipts in 1 year for some reason, there could have been, somebody, that happened to when we had COVID. But you still have to file something every year. If you don't file a return for 3 years in a row, no matter which one it is, then the IRS will revoke your tax exempt status.
And that's Kathy,
then
an
you
automatic
have
thing.
to go through the process of getting reestablished.
Right. Kathy, that's an automatic thing, right?
Huh?
It's automatic. The IRS they don't mess around. It's just like, if you don't file in the time that they give you to file 3 years, they just boom, it's gone.
Yes, it's gone, and they will send you a notice, but post office, they mail it. Post office, we can't always trust the post office to get us the mail. And, I've had I've had clients where they, have learned weird, they've found out different ways that they didn't have their status anymore.
Right.
And so it's not an easy process. It can be done. But depending on how long it is, you have to pay. It's to do, if you have to do the 1023 process again, like you did originally, that's $600 that you're going to have to pay the IRS. It's got to be online. And
$600, and if they have to file the bigger 1023, it could be 6 to 9 months before the IRS responds and so forth. Hey, we do have a question from the audience. Does the 990 EZ use an average of 3 years?
If we're talking about for the gross receipts,
that's what I'm thinking that the question is about.
Yeah, if that's what you're doing, I don't know that in my experience, I don't know that I've seen, income, I honestly, I usually don't look at over the 3 years unless it's a brand new organization. Because I have a couple of them. As a matter of fact, one I did right now, is a brand new organization, and they've only had 2 years. They're still under the 50,000. But I've had a 990 where they would do a 990N, and that third or fourth year, they've had it where it messed up their the allocation for the 3 years, so they had to do a 990 easy rather than the 990. But I would imagine that the funders understand if you're a small organization, they will, certainly accept the 990N, but, they really want to see, your 990 EZ or your financial statements or both. So it's probably advantageous for you to do it, even though you might not necessarily, need to do it. In other words, these are the IRS requirements. That doesn't mean that if you have, $50,000 or less than 50,000, that you may or may not want to do an EZ. That's certainly up to you, but these are the IRS requirements. So,
the kind of like the IRS, it doesn't matter whether you're filing the postcard or the EZ or between the EZ and the full 990, it still is that 3-year average on whether or not you go to that next level. So I think that answers that question. We have another one. If they file the 990N, what's the average cost the CPA charges? We're new and we don't have $50,000. So paying a CPA can kind of wipe out all their reserves. You know what? The N is, because the only thing that is asked around the N is, do you have less than $50,000 in revenue? That's the only financial piece of information. There's not really a need to have a professional deal with filing the N. There's only 11 questions basically, and it's what's your address, what's your name, did you have less than $50,000?
That's it. Yeah.
It does ask who your board members are. By the time you give all of that to a professional to do the filing, you could have finished filing it yourself. And it's all done through the IRS. I'll put the IRS link on where to file your 990N in the chat.
Yeah, it's very simple. I will tell you that the firm that I work with, we don't charge for 990Ns. It's just, but it's something that you can certainly do yourself. Not a problem. It's very simple. You don't need an account or anything. You can just go in and get signed up to do that. So, but there is one thing that kind of going into getting started, and we're talking about bookkeeping. I will say this about the 990N and bookkeeping. It's real easy to decide, oh, well, I don't need to worry, okay, I know what I got during the year. I've got 40,000, maybe one year I got 30, maybe one I get 45 or something. And so you don't really need to kind of keep track of that. You don't maybe necessarily have to have particularly books that, but what'll happen is when you get into, unless you think that you're never going to get over 50,000, what'll happen is maybe year 3, 4, or 5, you will get into where you have to do the EZ. And when we get to the Schedule A, you're going to have those amounts showing for those 5 years. So even though it's tempting maybe to not worry about doing a set of books, or at least, keeping track, you're going to need it eventually. So it's so important to have bookkeeping done first. So when you're, I'm not talking about the 990N. So let's talk just about the 990 EZ, where you are going to have to do a tax return. The first thing you want to do is you want to have your accounting completed before you even start doing this. I will say that nonprofits are very creative when it comes to a chart of accounts, which is those account names that we talked about. I know when I assist people to set up their books, and we'll talk a minute on software, but QuickBooks, if you're using QuickBooks, they have in the software, the nonprofit, generally a general nonprofit chart of accounts. A lot of times it's overkill. So what I normally would have them do is look at the 990, look at the pre-printed expense accounts and income accounts that are on the form, and sort of mirror image that. Because, as a preparer, whether I'm doing it or whether you're doing it yourself, you're still going to need to get, those numbers on those lines. And so the other thing that you're going to need to do is you need to have a list of your donors. I don't know, some you may have donor software, others may just do it on Excel or something. You are going to need on the Schedule B to at least show anybody that gave $5,000 or more. So you're going to need to have some accounting doing that. So I think, Lisa, you may have, QuickBooks, guys, most of the nonprofits, as long as you're a tax exempt organization, TechSoup.org is, the one of choice that a lot of people use. You can use, they have the QuickBooks Online version, which is $80. Very, very cheap. I'm sure, Lisa, is there some other bookkeeping software that you may have recommendations for doing the 990?
To be completely honest, there is nothing out there that beats the price point of getting QuickBooks Online via TechSoup. I've put TechSoup.org in the chat.
Mm-hmm.
Because transparency is so critical with being a nonprofit organization. And earlier, Kathy was like, well, if you're just filing the postcard, maybe you're not keeping that great of books because, you didn't go into starting this nonprofit organization to do bookkeeping, right? You did it because you wanted to fulfill the mission. But being a nonprofit, transparency is one of the absolute key things. And the state of Texas actually requires you, as a corporation, and nonprofit organization is a corporation. The state of Texas requires you to have financial records that they can look at, right? And so just having your bank statement or your credit card statement does not count. It needs to be more formal than that. And certainly by the time that you get to filing the 990 EZ, there's so many details in it that you need that doing it in Excel, unless you are an Excel absolute wizard, it's going to be more overwhelming. And I'm Excel Advanced certified, and I would rather use a program that's designed to do bookkeeping than try to force Excel to give me the reports I'm going to need for the 990 EZ or the 990. So highly, highly recommend utilizing TechSoup and then getting the $80 version. That's $80 a year.
Mm-hmm. Yeah.
Even at a $50,000 or under nonprofit, earmark budget, that's the term, okay? $80 a year for this tool that can really, really help you get your self-organized such that you're leading into being able to do that full 990.
Yeah,
and,
absolutely.
Right. So there are other programs out there. Xero, Xero is the way that is spelled. It's another one that's fairly common among nonprofit organizations, but QuickBooks through TechSoup is substantially less expensive and gives you as much or more than you can get with Xero.
Yeah.
So,
well, and you know, the last thing on the slide is the other thing you're going to need is a list of those board of directors, officers and directors that you had during that particular year. And I would, my recommendation, I'd be hitting up my board, especially my treasurer. Hey, you know, give me a donation so I can go buy that. You know, it's important, you know, for doing that. And so, I know it's hard a lot of times because this would be considered as being operating, you know, funds. But you know what, that your board of directors are supposed to be there to fundraise. You know, every board should be putting something into the organization, no matter how much it is. They can afford $80 a year to put that on there. And speaking of, go ahead.
I really do think it's absolutely necessary, however big your organization is, in order to get that transparency. You need to have better bookkeeping than you can do in Excel for a nonprofit organization. So having that at QuickBooks is absolutely required, in my opinion. If you're going to have a nonprofit organization, you must have this.
Yeah. And speaking of software, you know, we mentioned, you know, certainly, let's say you've got your books and whatever, but okay, now you've got to do the tax return. So unless you're going to hire, you know, somebody to do it for you, then your choice, you have two choices. You can either do it yourself, and you can do that one of two ways. You know, the IRS has the forms online. They are, you know, the problem you're going to have is they're fillable, right? You can fill out the forms, you know, because they're PDFs. But the problem is the IRS requires every nonprofit to electronically file the return. So
Absolutely.
that means you're going to need some kind of software. And I did Google, you know, I have my own software, which would be way more expensive than what you guys wanted, but would want to pay for. But I did Google some of the 990 Easy tax preparation software companies, and Tax 990 is one here that's just under $100. It includes all the regular schedules, required schedules. There's a free retransmission if for some reason the return gets rejected. There's no cost to you if you have to amend the return. If you find out, oh, I screwed up on something, I need to correct it. There's no cost to that. And it is an IRS authorized e-file provider. So, and it says it's best for small to mid-sized nonprofits that want strong support and guarantees. Honestly, to tell you the truth, guys, I would definitely do software. I don't know, you know, I don't know, typing that in is not going to get that e-filed. So
absolutely. So Kathy, in the chat, I've already put form990.org and tax990.com are the two that I recommend.
Okay, good. Yeah.
One is a little less expensive than the other one, but they're kind of clunky. Think back to the DOS years. If you go back for,
I'm sure our guys are so young they don't even know DOS.
It's a little bit more clunky to use. Both of them work adequately, and I've got a lot of experience with helping nonprofits utilize both of them. They just like if you've used TurboTax or Free Tax USA to do your own tax return, they're very similar in the way that they ask the question and then you answer it. And they're both very, very cost effective. Both of them, you can use them to file the 990N also, but you know, you can go directly to the IRS if you want that. So I put both of them out there. Another question was around, well, how much does it cost like for a bookkeeper for us to outsource directly to a bookkeeper to do our bookkeeping. And, that's very varied, but I would say that at a minimum, you're going to start, if you wanted a qualified bookkeeper that does good nonprofit accounting, even if you've got less than, say, 25 transactions per month, it's still going to cost you like a minimum of around $300 to $500 a month for a nonprofit bookkeeper that knows what they're doing. My recommendation is especially if you're, under $200,000, what you need to think about is as a percentage of our revenue. Okay. What you want to think about is that your total administrative costs, your management and general costs, should be somewhere between 10 and 20% of your overall revenue. Well, if your management is that much, think about the fact that if you're paying $300 a month to somebody to do your bookkeeping, that's going to be a very, very large percentage of that amount. Yeah. So it might be better to try and recruit a treasurer for your board that has experience in doing this, or a volunteer that really understands what it entails to do the bookkeeping. By the way, TechSoup, since we brought that on board, great teaching modules on how to do bookkeeping in QuickBooks for nonprofits, and all of that is free. So awesome. Utilize them as a training tool also. So I would say minimum of $300 a month if you're just trying to find somebody off the street. And, if you're smaller, keep in mind that you want it to be somewhere around under 5%, of your overall budget. So back into that number and see if you can account for that. If you decide that that's something that you want to do, then you got to make sure that you budget for it and that you make sure that you've got enough funds to cover that.
Mm-hmm. Exactly. Yeah. Do whatever you can to do everything that you've got with the bookkeeping and the tax prep electronically, because it's just going to save you so much time and money later on down the line. Because I'm of the opinion that and I've had some TALA clients that I started out with 20 some odd years ago, that they were a 990 EZ, they became a 990, and they just blossomed. And so that's what I hope everybody does. So you're going to need to be able to have that technology with you. So we talked a little bit about in-kind contributions. Just wanted to basically say what it is. In other words, generally in-kind contributions are, if somebody donates their time, or maybe they might donate a car or something else. I had a nonprofit that they were getting free rent in an office building. So those are the kind of things that we talked about in kind. There's no cash involved in it, but it's kind of one of those things where, like for the rent, for example, they needed a space to rent. Luckily, they got it in kind, which is great. But if they didn't, they would have to pay for it. Same thing with, TALA's legal services. It's great, that TALA does that as, as an in kind, because if you couldn't, you would have to go out and pay for that. And it's going to be way more expensive. That's for sure. So you do want to record that on your books. Usually I have an income account that's an in-kind contribution account. And then you would offset that by some expense account. So in my case with the rent, I would put rent expense in kind, or, legal services in kind. What I like to do is I like to have the in kind separated out from any of the other expenses that might be in that same category where you did, actually pay for something. Because, like we talked about, some of these in-kind amounts do not go actually on the tax return. Keep in mind that you are you're the one that's going to determine the fair market value. And, as we say, the price that would be open on the selling, on the open market, and what's agreed upon. So, when it comes to rent, that was pretty easy because it's whatever the, normal rent would be in that building for that space. And so, like I said, when you do it on your books, we're going to debits and credits, guys. You're going to debit the expense account and you're going to credit the in-kind contributions. So contributions are generally a credit, expenses are a debit on the books. So, but also too, the donor is the one that doesn't tell you, what you don't tell the donor what that, if they're giving you something, you don't tell them what the dollar amount is. It's their responsibility to figure out, because, they're not going to necessarily, if, for example, on the car, sometimes I've had people where they've, given organization a car. It depends on what you want to do with the car. It's one thing if you want to take the car and sell it to get the cash. It's another thing if you're taking that car because you need that to do deliveries. So, if it's something that they give it to you to do deliveries, then you're going to turn around and that's going to be an asset of the corporation. So, okay, so let's start. We've kind of laid a little bit of the foundation. So let's start looking at some of these forms. And that's too little for me, so I'm going to get my big form. So the first, this is the page 1 of the 990 EC. And the first thing I wanted to mention, this is something I see a lot. In A, I don't know if you can really see that very well, but in A, it says for the 2025 calendar year or tax year beginning, and then it's got blanks. So going back to my December 31st calendar year in, you're not going to put anything in there because it's going to be for the calendar year. But if you happen to have that June 30th year in, for example, then you would put July 1 of 2025 ending June 30th of 2026. So you would fill that out. A lot of times I see people filling out beginning 1/1 of 25, ending 12/31 of 25. That's not what you need to do. Section B is a little check if applicable. If you had an address change, a name change, if this is your initial return, final return, amended return, and if you have an application pending, because, you may have done your 1023 application, it hadn't come back yet, but you've got, you can take, donations and stuff while that's pending. So you would check that box. Name of the organization, employer ID number, phone, that's pretty much the accounting method. Cash or accrual, most of the time it's going to be cash. I'm not going to go into the detail on that. Website, age. Check if the organization is not required to attach Schedule B. Like I said, we'll talk about B, but Schedule B is generally if you have somebody that gave you during the year $5,000 or more. If you didn't have anybody that gave you that, then you would check that box saying that you're not required to attach that. The tax exempt status, of course, most of you are going to be the 501c3, which is here. There could be, I don't know if we have anybody that might be a 501c6, which is a membership organization, but then you would mark that box. Form of organization, just like Lisa said, I would imagine everybody's pretty much a Texas not-for-profit corporation, so you're going to mark that corporation box. And then, so part 1 is, this is where we have the revenue and the expenses and what we call the change in net assets or the fund balance. So, and I don't know if it shows up very well. You could probably see, this is from the the form's on the IRS website. And by a lot of these numbers, these line numbers, it's actually like a little question mark. And so if you pull it up and you hover over the question mark, it does, kind of give you some information about what to put on there. But line 1 is pretty simple: contributions, gifts, grants, and similar receipts. So, this is, whether you get like grants, government grants, foundation grants, individual contributions, corporate contributions. If you get any, from corporations or whatever, it's all going to be on line 1. Line 2 is your program service revenue. So, for example, those of you that, either, music, dance, that you actually, theater, where you actually do a performance and you get fees from, ticket sales from that performance, that's what you're going to put on line 2. So that is going to be a separate item, because that's, contributions or when you don't get something in lieu of the money that you get. I see some other stuff, unless you're just talking.
Well, there was a question about volunteer hours.
Mm-hmm.
Are volunteer hours considered in-kind donations? And the answer is, in general, no, they are not.
Yeah.
But you do want to track them. You want to track how many hours your board gives you. You want to track how many volunteer hours you get, because that tends to tell more of the story further on down in the 990 for sure.
Yeah.
You have to actually report how many volunteer hours there are.
Right.
And even if you aren't reporting that, let's say you're still filing the 990N, you can say that you had 18 volunteers and they volunteered a total number of 1,000 hours for the year. And what that does is it tells the general public that people are really interested in the mission that you have. Mm-hmm. And so other people get more excited about wanting to donate to you when they see other people on the bandwagon, even if it's not with dollars. So volunteer hours, no, they don't get reported in dollars, but or as in kind. The only twist on that is if you do have professional legal or accounting hours donated, then those are treated a little bit different for generally accepted accounting principles, GAAP. You do have to count, you do have to capture those, but in general, especially for the 990, no, volunteer hours are not counted as in-kind donations.
So, okay. Line 3 is membership dues and assessments. I don't know if anybody actually has membership dues, but if they did, like museums, would have membership dues. That's the line you would put that on. Investment income, that's where, if you're fortunate enough to have a savings account or a CD or a brokerage account where you might have interest and dividends in there, then that's what would be on line 4. Line 5A is the gross amount from sale of assets other than inventory. So let's say, I got that van that somebody, donated and we're using it in our organization. And then we decide to sell it and get something else. And so that would be a sale of your asset that's not inventory. And then, of course, less cost or other basis. Now, if we got, certainly if we got it for free, then, there was no actual cost involved. Gaming at line 6 is gaming and fundraising. Please, I hope nobody's doing gaming. That's, bingo, pull tabs. I won't go into my horror story about that, but I would discourage that. Let's just say that.
Well, first of all, you have to have, you have to apply to be able to do that kind of thing with the state. So you can't just do it.
Yeah.
You have to have permission to do it. And there's a lot of regulation around it, not only at the IRS level, but particularly in the state of Texas.
Yeah.
If you're in another state, it can even be more complicated. We do have a question, Kathy, about if you had a contribution for programs. If one sponsor gives $1,000 and gets 3 tickets to a concert for that $1,000, is $150 included in line 2 and $850 in line 1. So it's a sponsorship split because they did get something in consideration for.
Yeah, I could say, yeah, I probably would. And that's going to segue right into 6B, which is income from fundraising events. This is very similar to nature from fundraising events. So 6B says here that, and excuse me, to attach Schedule G if the gross income and contributions exceed $15,000. So this is going to be your typical, gala or your, fundraising luncheon or whatever, you have. The example, which is a little bit like what she's saying, they're saying is that if I buy a ticket to a gala for $150 and I know $50 of that is considered, what value I get for the food and entertainment that I'm going to get, the $100 is actually the contribution portion. And so this is what 6B is saying here. They want the gross income from fundraising events, not including, in my case, $100 of contributions. So in other words, the $100 would go up on line 1 and the $50 would end up on line 6B. So it would be split. Now, do I see that a lot, people doing that? No.
Right. While we're talking about fundraising, there is a lot of confusion around that word. Some organizations, anytime they solicit donations, they think that's fundraising. What do we really mean by what goes on line 6 versus what goes on line 1?
Well, for me, what I would consider on line 6 is generally the gala, the special event kind of thing that people are having. I'm trying to think, usually it's those special events. Now schools, when I think about, I do some stuff, volunteer work for some school, elementary and high schools. The elementaries, boy, they've got fundraising stuff all over the place. And it's really confusing because you don't know when they're going out and selling all of these different things, is that fundraising, or is that contributions? And, most of the time in their case, it's not really contributions because they're buying things, or they're paying for tickets so they can go dunk somebody, right?
Yes.
The dunk the principal kind of thing, so it's a little bit of a different, but I don't know. I'm sure the IRS's instructions have something. Do you have a better, I just kind of, it's kind of like I know when I see it.
Yeah. So the IRS does have definite definitions around what they mean by fundraising. And most of that is, it's either bound by time or space. So in the case of a school fundraiser, they're saying it's from Tuesday to Thursday, we're going to sell tickets to go dunk the principal. And so for 2 days, they're gonna sell these tickets, and that's their fundraiser. When we talk about a gala, the gala is going to happen on Thursday or Saturday, whatever, a day. And in addition to that, typically when you are purchasing the ticket for the gala, the ticket to go dunk the principal, when you buy that ticket, it's not a one-for-one purchase. So I know that when I'm purchasing it, I'm paying $5 for that ticket to go dunk the principal, because I know that the value is going more toward the organization than it is to get the value of me being able to dunk the principal.
Right.
Right. And same with a gala. You may pay $250 for a seat when, according to Kathy's example earlier, the entertainment and the food was only worth $100. You intentionally know that you're paying more than it's worth because you want to give to that organization. And often the times there's also other opportunities for you at that function to continue to give and give and give. The idea isn't that that one ticket is the only way that we're getting funds in from that fundraiser. And it's very important that you understand that the fundraiser is from this time to this time. Any other time that you put your little jar out for donations to go in it isn't a fundraiser because it wasn't specifically identified. So it's definitely a time frame and oftentimes also a space.
Yeah. Lisa, you kind of cut out a little bit on us, so I don't know if you're having internet issues. So, technology, what can we say? But yeah, because remember too, on your galas, you have, not only do you have your ticket, but you usually have, a silent auction where you may be getting, items, baskets of items, and also you may be getting live auction items also. So, but anyway, so let's go on. So we've got the income from the fundraising, and of course, then the direct expenses from the fundraising. Then on 7A, we have gross sales of inventory, less any kind of returns and allowances. I don't know that many people. I mean, the type of organizations that I think we have on our call tonight probably are not ones that necessarily have inventory. But I know sometimes people, you may have inventory of T-shirts or cups or something like that. And that's where, you would put those items that you actually have for sale. Like the Junior League, right? They have their cookbooks, for sale. That would, they probably got that in inventory. And then, line 8 is any other revenue. They tell us to describe in Schedule O. Schedule O is just a blank schedule that you would put, anything that's not, that they want you to have more discussion on. So that's the revenue section of part 1. And then the expense section, which is pretty, condensed, if you will. Line 10 is grants and similar amounts paid. That's if you were granting another organization some money. Benefits paid 2 or 4 members. I don't know that I've ever seen that in anything that are any of the organizations that I've dealt with. Line 12 is salaries, other compensation, and employee benefits. This is salaries. We're talking W-2 salaries, not 1099, because that's not considered a salary. That would be on line 13. So line 13 is professional fees and other payments to independent contractors. So professional fees, CPA fees, legal fees, those kind of, professional architect, maybe something like that. Then 14, we've got occupancy, rent, utilities, and maintenance. That's, if you, or renting a space or something like that, all of that would be considered in there. Printing, publications, postage, and shipping, that's your office, supplies type thing. And then, of course, other expenses. So, and then they say describe in Schedule O, those other expenses, that could just be, y'all don't get crazy. Just, try and keep it simple, not have 50 accounts there. And then the last section is what we call our net assets. So basically you're taking your total revenue less your expenses. That's going to be on line 18. That is hopefully your income, your excess, and not a deficit. And then you're going to have your net assets, your beginning balance that you brought from the time before, and then any other changes. And then line 21 is your net assets. And this is, once again, where having software is very, very helpful. Page 2.
Hey, Kathy,
Yes.
before we jump there, we do have a question again.
Okay.
Can you clarify, contractors do not go under professional fees? They go under line 13, correct?
Right. Yeah. To me, you could say, for example, CPAs, legal, architects. I'm trying to think, somebody else that might be a licensed, when I think of professions, I think about licensed type of people, they're more in the professions, even though they are an independent contractor. They are not they're not, working for you as a W-2 employee by any means. But, to me, those people would, even though they are contractors, they would go in the professional fees. The other contractors, that would be, to me, for example, on your dance, like I'm thinking, one of my clients is a dance organ, all of the dancers, they get paid 1099s. Those are not professionals. Those are independent contractors. So they would go on line 13.
Yeah. As it turns out, line 13 actually says professional fees and other payments to independent contractors. So it's one and the same.
Yeah,
right?
That's true.
So then we have a question about, would professional fees include like a contracted graphic designer who did a one-off project? The answer is, if you pay them as a subcontractor, the answer is yes. So in the 990 EZ, the differentiator is, are they employees or are they not employees, right?
Yeah.
And yeah, Shirley, I agree. Yeah. It's so confusing. So basically, it doesn't matter if it's one-off or whatever. If you're not paying them as an employee with a W-2, then it's going to go in line 13.
Yeah.
Whether it's professional or other subcontractors.
And your 990, because we were not going to go into it, but the full-blown 990 on page 10, which is where all the expenses are, when it comes down to those independent contractors and those professional, they do have more lines specific to that. So anyway, okay, so page 2, balance sheet. This is, beginning of the year and the end of the year, which is the beginning year of your cash and your savings and any kind of investments. If you're fortunate, if you happen to have a land or buildings, that's some of your assets. Other assets. So if you have vehicles or computers or whatever that are part of your assets, that would go on line 24. And then you would describe in Schedule O, and then you would total that. Total liabilities, you can see is just one line. If you do have employees, for example, you might have payroll taxes, at the end of the year that you haven't paid till, the January of the following year. Some of you guys may have had, SBA loans, from back in the COVID days or whatever, maybe you have a line of credit or whatever. Those are just total liabilities. If you own a building or whatever, you might have, still a mortgage on that. And and then, assets minus liabilities or your net assets or your fund balance. Part 3 is the statement of program service accomplishments. First thing is, what is your organization's primary exempt purpose? Certainly need to fill that out. Part 3 to me is like super important, because this is where you are touting all of the wonderful things that you did during the year. I want to look at this. Funders want to look at this. I don't know the IRS necessarily wants to look at this, but what they're asking you to do, as it says here, describe the organization's primary program service accomplishments. This is what you do. These are your programs for the 3 largest program services measured by your expenses. In a clear and concise manner, describe the services provided, the number of people that you served, benefited, or other relevant information for each program title. So this is where they want to hear what great things that you did during the year. And I know, on here, it doesn't really give you a lot of space, but, when you've got, the programs, the X will go on to Schedule O. So please fill this out. They want to know the expenses. And just so you know, those total program expenses that would be on line 32 is not going to be the total of expenses that you have on line 17 on the first page. They should be different, because on line 17 on the first page, you should have some administrative and fundraising type expenses on that page. This is just what your program services are.
I agree, Kathy. And really, of all of the things that are on the 990EZ, this is the place where you can absolutely shine the most. And so many people I see just put the dollar amount of what they spent on a program and the name of a program like outreach or education. And that doesn't tell anybody anything about how brilliant your mission is and how great it is that these programs have been able to fulfill that mission. This is the area in which you really, really want to take some energy around tracking things that are not just financial. You want to track how many people you served, what demographics that they represented, the outcome of what you were trying to implement, not just that you had a program, but that it got them from this point here to that point there, and that's how it fulfilled your mission. So this section is, I think, the absolute most critical in the entire 990EZ, not what you're telling the IRS, because Kathy, as you mentioned, the IRS could probably care less about what you spent in these sections, but certainly for potential sponsors, for potential grantors, for other people that are interested in doing a collaboration with you. So it's really, really critical that you focus a lot of energy on this particular section. We did have a question around the expenses being reported, and did they have anything to do with with 1099s? And the answer is no. You report all expenses, regardless of whether 1099 reporting was necessary or 1099 reporting is irrelevant on how your expenses are being reported for 990 purposes. A side note for 1099s, they did increase the threshold from 600. Yes, Kathy and I are doing a little happy dance here. They increased the threshold from 600 to 2,000 on January 1st of 2026. So just be aware that that has changed for this year. That's a whole nother conversation about reporting, but there's that. And then there is a question about changing the fiscal year and how you indicate a short year thing. I think that's a little bit outside the scope that we need to have today. I'm going to put Kathy's email in the chat. If you would email her that question,
happy
she'd be happy to address it.
Yeah, absolutely. Okay, so very important there on part 3. Part 4 is the list of your officers, directors. I don't know if anybody has a trustee or key employees. By the way, there is, when we talk about key employees, there is, and we're going to also talk about, I'm trying to think of what the word I'm trying to think of. Let me see what that is. I'll find it in a minute. Disqualified persons. There is, I know I hate to tell y'all to look in the instructions, but unfortunately there is some specific definitions. So if you're trying to decide what is a key employee or what is a disqualified person, which we'll talk about in a minute, look, I hate to say it, but unfortunately look to those instructions. But basically you just need the officers, the name and the title, the average hours per week. So, we talked about volunteer hours. Well, these board members, how much do they devote, how much does your president of your organization devote every week to that position of president of your organization? Reportable compensation. This is whether they get a W-2 or a 1099. And then health benefits and the amount of other compensation. I will say, for example, when we talk about, and a little bit goes into, these fiscal year ends, December, if you have a December 31st year end, a calendar year end, you're going to look at the W-2s or 1099s for 2025. If you have a fiscal year end, so like if you have a year end that's coming up June 30th of 26, this in a couple of months here, then you're going to be using 25. You wouldn't have 26 anyway. So you have to use the 2025 W-2s and 1099s to put that on there. So that's what's kind of weird is the fact that if you have that fiscal year, whatever that would be, anything other than calendar, if you had salaries there on page 1 that we talked about, you've got the salaries from from July 1 of 25 to June 30th of 26. That's not going to be the same dollar amount that you have for that person's 2025 W-2. So it's not going to match. So just remember that. And let me see. Part 5, I'm not going to go over this. This is basically a series of questions. Answer yes, no, which, probably most of them you want to say no to. If did the organization engage in any activity not previously reported to the IRS? If yes, then you need to provide a detailed description. I'm thinking there was several, I know during COVID, people where they kind of they had to change to do something that they normally didn't do. And so, that would be, yes, well, we had to do this. It's not a bad thing, sometimes, over, maybe you've been involved, maybe your organization is a long 20-year organization and you finally decided, look, we just need to do something different. And so, you would say yes to that and explain. Down on number 41, where it says list the states in which the copy of this return is filed. Texas, you don't have to file anything with the Texas. 42 is the organization's books are in care of. So you want to make sure you put that. And then just, basically just answer the questions there. On page 4, part 6, this is for 501c3 organizations only. And, we kind of talked about the highest compensated employees and independent contractors. This is where you would list them, either the employee or the contractor, if they were paid over $100,000. So, I don't know, maybe I don't see this too often. I'll just say that. And then down here at the bottom, is where you would sign, the officer would sign. So that is a current officer. So if, for example, you usually have your president sign and, here this is 25, but maybe now, like if it's, like I said, it will be due, May 15th, maybe you have a different president. So that current president would be signing the return, or the current treasurer, or whoever is the current person. So now sometimes people have had kind of a weird thing. Well, I wasn't part of that organization during that year. So, I don't know, but it's okay. All right, Schedule A. Schedule A is a schedule that is required to be filed with the 990 EZ and, of course, the 990. Basically, Part 1 is the reason for your charity status. And what I see on this is, and if you're not sure, this is where you look to your tax exempt letter that you got from the IRS. It will give you the code sections that we're referring to, and it will either be on box number 7 or box number 10. And I think Lisa, I know you had marked box 10 because I think most of our people are probably this, where they give 33 1/3% of their contributions related to their exempt function.
Right. So of all of the organizations that TALA works with, they all check 10. But you can talk about the difference between 7 and 10. So the next slide, if you check 10, then you would drop down to Part 3. If you have to check box 7, then you fill in Part 2.
Right. And this is where I was saying earlier about with the 990 ends, is that even though you might not, you can see that for this 25 return, it's going back to 21, 22, 23, 24, and 25. So it's doing a rolling 5-year period that they're looking at. And next year, 21 will drop off and 26 will be added. And so this, it's a little bit easier, honestly, if you're box number 10 to have to do this page 3, because you're just listing, the gifts, grants, contributions, your admission, your gross receipts from your admissions. And I mean, and then when we talk about, like on 7A, we talked about the disqualified persons. Generally, your disqualified person is like your officer, a board member. And it could also be maybe, you've got a husband and wife. Maybe the wife, could be also considered a disqualified person. What you're trying not to do is you don't want to get one person, the board. Yeah, you want to have a lot of money, right? You'd love to have your board person give you $100,000, but if you only got, $10,000 from everybody else, then that's going to get your percentages, off. So
right. So where I see this come into play a little bit more often is the first year or two that people start filing the 990 EZ. When you have a founder that is still very involved with the organization, and they, it's their baby, it's their purpose in life, and they end up giving a lot of money out of their back pocket because they haven't figured out a way to have enough money to run the organization yet. And this is where the founder, whether they're a board member or just a volunteer or the executive director, doesn't really matter. That's where this idea of the, Kathy, what's it called? This disqualified person.
Right.
This is where you have to be very, very careful. Yes, you want it to continue to be in existence, but you can't continue to support it yourself. That's not the idea of a public charity. Public charity means people from the public are supporting it financially, right? So that's probably the most common thing that I see in smaller nonprofit organizations, is that the founder is continuing to provide too much of the dollars to run the organization, and you need to step back and make sure that you're getting enough fundraising and enough donations and enough program revenue so that you're not the only one that's supporting this financially.
Yeah, exactly. And I've had in my years, 20 some odd years of doing this with nonprofits, I've had actually the opposite, where I've had people's percentage get messed up because they got a huge donation that they weren't expecting. And that messed up their percentage. And there are, just like if you go below that, if you get down to 10%, or if you get over that, there are special things that you can do to let the IRS know why. And so since we're getting very close on time already, I'm not going to go. I would just say, honestly, to tell you the truth, Schedule A can be a whole course just in itself, I think. And so if you have any specific questions, please email me. I'm more than happy to discuss it. It's just, it gets very, very complicated, but I do want to make sure that we get through some of these other ones. Schedule B, which is another very important one. We talked about it earlier on. This is where generally, if you're either under the general rule, which is what they were talking about, the $5,000 or more, or you could be under the special rule, which is the first little box there. But this is where you're going to list the name and the address and the zip code and the total contributions, whether it's a person. If you had payroll is like, some people have the, United Way from their payroll, deducted, and non-cash. And so this is where you're going to list this. Major thing that you want to know, to be careful, is, as we know, the 990 is a public inspection form, except Schedule B. Schedule B is not available. It should not be available for public inspection. So what you would have to do, and like what we do, is we give, sometimes we'll give people a public copy. And what we've done is we've taken out the name and the address, but left the dollar amounts on there. So just make sure, because I know that a lot of times people will upload this to their website, to well, I guess it's Candid now and not GuideStar. They'll upload it, and sometimes that Schedule B will be in there, and that is not open for public inspection. And so just keep that in mind. And we didn't have the third page, but the third page has a section where you would put the non-cash. So like, for example, my example about getting the free rent, or getting, something else, that has been donated to you, that you would put that on there. Schedule G, if you look on this first page, it says, that if you file a 990 EZ, you do not have to fill page 1 out, which is nice. But I want to focus on page 2, because that is where we want to talk about. And this is, once again, like it said on the page 1, if you had $15,000 or more in gross receipts for your fundraising, then you're going to need to fill this schedule out. And you can see it's got 3 columns there for the events. So maybe you might, like I said, you may have had, 2 events, and maybe you had 5 events, but you're only going to list those events if the gross receipts itself was $5,000. So you could have had a gala for 100, and then maybe you had a breakfast, and it was only 4,000. So you wouldn't put the breakfast, but you would put the gala. So here's where, on line 1, it's the gross receipts. Line 2 is that less contribution. So going back to the example where we're talking about, the ticket less whatever the contribution portion is, and then whatever the gross income would be. Cash prices, non-cash prices, rent and facility cost, whatever the cost is, food and beverage, entertainment, and then any other direct expenses. So once again, go ahead.
This may be a really good example of one reason to use something like QuickBooks, where you can use the QuickBooks function called class, where you can say, any expense that is related to fundraising goes in the fundraising class. And then you can run a report out of QuickBooks that just makes this really, really easy to fill in. Whereas if you keep it all on a spreadsheet, it's going to be a lot more complex to break out just these expenses out of all of the other expenditures that you have.
Absolutely.
And this is exponentially more important when you get to the Form 990, the full one, because you have to do that not only with fundraising, but with your programs and your management in general, as well as your fundraising. So those functional expenses are much, much easier to keep track of if you have a program like QuickBooks and you use the functionality called class.
Exactly. I was exactly going there. You just beat me to it. And what I do, like what I would do is down at the bottom where we have other income and expenses, that's where I would put, the gala stuff in those, because that's not part of your normal, operations, if you will. And so, yeah, definitely use classes. That's going to help a lot.
We have a question about online raffle income and where does it go?
Online raffle income. How much? I guess it would depend.
It does. It kind of depends on, is that gambling? And if so, then you have to report that particularly on the gambling line. If it doesn't fall into gambling, then it could be in fundraising. If it was, okay, the note is no, it's not gambling. Okay.
Yeah.
And if it was part of a fundraiser, then it goes in fundraising. If it's not part of a fundraiser, then most likely that would be general donations.
Yeah,
So
I mean, there's a platform to manage. I guess I'd be curious, how much are we talking about? Because if this was something that was considered, a fundraiser, even though it was done online, if it's, if that's all they had and it was less than, $5,000, I mean, you certainly wouldn't put it on the G. So I would just put it as regular contribution.
Right.
Not bound.
So they're saying that it is, they are considering it fundraising.
Yeah.
And so it doesn't have to be bound by a place. It can be. But a fundraiser isn't a fundraiser all year long.
Yeah.
Think about National Public Radio, NPR. They have a 6-week fundraiser, but it is bound by time because it is for 6 weeks. Mm-hmm. And during that time, any money that they get from that advertising and marketing that they do, that's all considered fundraising money. Now, later in the year, somebody could still donate to them and still become a member, right? And that's not fundraising. So it depends on how you've presented it to the public on whether or not it's fundraising or it's regular donations.
Mm-hmm. Yeah, that gets a little tricky. Okay, so we've got just a few more minutes left. I don't want to get to an unrelated business income. Basically, I was talking about this 990T is required if the organization's gross income for unrelated businesses is $1,000 or more. The 990T has the same due date as your tax return, your regular 990EZ or whatever. If you have $1,000 or more, then we generally said nonprofits don't pay tax. This is the exception. If you did have unrelated business income and it is more than more than $1,000, you're going to pay 21% tax on that. Basically, once again, unrelated business income can be a whole, topic in itself, just for that. But I would say the typical, it's something that you don't normally do. The typical one that I used to see quite a bit, and you just don't see that much anymore, is the newsletter. Back in the old days, we would get, somebody would do a newsletter and they would mail it out to, members or non-members or whatever. They would get funds from the advertisements, right? And then, so they would get maybe $40,000 of, fundraising stuff. And then, but they would have the cost of the printing and the mailing and all of that. So a lot of times what it usually ended up happening is that the cost almost overpowered what the income was. And so they may have even had a loss or whatever. So, but nowadays, people, we don't mail things out anymore. Now it's all online or whatever. So, but the other thing, another example, and I don't know I guess maybe they still do it, but I remember when I used to work with the houses downtown. One of the houses they used to open up for weddings. And so they would charge, for that. So it's money that's going back into the, coffers of the nonprofit organization, but that's not what their main purpose is. And so that's and this is just the 990T. And, I'm not going to go really down there. Let's just quickly talk about, we talked a little bit about the differences. I'll show you, here's a picture of the differences of what page 1, for example, of the 990EZ on the left and the 990. The 990EZ, we had 4 pages. The Form 990 is 12. And, half of the pages are questions. I understand that this was back in 2008, by the way, when they finally changed this form to the 12 pages. But what they were trying to do is to get a quote snapshot on page 1 of generally your income, your expenses, what you have from last year compared to this year. And so that's generally what page 1 does. Page 2 is very similar. It's got the program service accomplishments. 3, 4, 5, 6, those are all questions or whatever. Page 6 is probably the one that's most, Lisa talked earlier about disclosures and transparency. Many of those questions on page 6 of the 990 are related to that. They are, other than I think the conflict of interest policy, most of those are not required by the IRS, by the way. But the purpose of that is that if you have some of these, for example, document retention policy, gift acceptance policies, if you have some of these policies that they're talking about on that line, then, they feel like that you're a better, more well-run organization, and that you should be sustainable, hopefully through the years. But anyway, here are just some resources. The IRS has got all kinds of stuff online. I think they do a pretty good job. They've got all kinds of videos and things like that you can use. They've got how to stay, exempt, so that you don't, have to, go through the process of trying to get your exemption back. You worked real hard to get it. You don't want to lose it because of silly, things. I've done so many people's reinstatements, and, a lot of it has to do with, the board. The board should be asking, if you're not giving them the 990 or the 990Z or whichever, even the 990N, for example, as a board member, there's responsibilities, for the board, and they need to say, hey, where's the copy? Did it get filed? Those kind of things. So So they're I'm not always blaming, I'm blaming the board too on that. So anyway, with that being said, it's 7:32. I was 2 minutes late.
Thank you guys so much. That was so helpful. I made notes. So Erin's going to get my notes to cover unrelated business income and some of the legal implications around raffles and things that Texas considers gambling that maybe people don't really think is the definition of gambling. So I think that she's going to, I already made some notes and I'm going to make sure that she covers some of that.
Are they going to talk to you about board responsibilities?
I do believe, yes, Erin's going to cover that some. And then our panel is half of our panel is going to be on board requirements and how to engage boards and things like that from our 3 experts. So everybody that's here, please join us. The next 3 Wednesdays, we'll be talking about nonprofit operations some more. Next up will be Lisa Sretinovic in the lead to talk about how to keep records of all the things that we just talked about today. So that would make hopefully your life and your accountant's life a bit easier. So again, thank you so much to everyone. Thank you, Kathy and Lisa, and we'll see everybody next week at 6.
All right. Thank you.